Oh, you don't want to say hi? Well, Arve, get ready for a big tourist season. Travel to Norway is up 70% year over year for bookings. Finland up like 120, but that means they went from 3 to 7. Yeah, that is crazy. Apparently, tourists are sick of hot weather. So instead of going to Spain, they're going to Norway. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. My name is Wayne. I'm a currency trader just like you. Yeah, my new diet, I don't eat solid food before 1 p.m. So my coffee's got 20% of my daily intake of fat, so it's kind of like eating a hamburger. And then I've had now 14 servings of vegetables, but all liquid. Ah, what an amazing disturbance it is on the body, huh? So anyways, good to see you. Bank of England did not cut. Did anybody watch the meeting, the press conference? I did. Cool. If you are a member of QuantBox, you probably watched with me. Yeah. Great. All right, cool. Quick update. Yields. Okay. 4.5. Oil up. Gold up-ish. Stock market hasn't opened yet. Bird says only veggie juice is not good for you, miss. Yeah, but I eat a healthy. I usually eat like a 4 o'clock mini meal, and then around 6 or 7 have a proper full meal. Yeah, I got you. You need the fibers. I got that. Okay, so jobless claims, huh? Did you see that? That's interesting. So I wonder if that'll push the stock market up today. I collected a dividend. This time of the month is great because I collect a lot of dividends. I got $71 today from a $7,300 investment. And you're like, dude, that's not a lot of money. Well, if you annualize that number, it's just shy of 12%. Huh? That's my T-bill and chill strategy, hiding out in the 20-year. So I'm happy with that. Keep it up. Okay. Now, if this falls back towards, let's say below 4, then I'm making money on the asset as well. So that's just the income is the 12%. So hopefully the value of the actual T-bills go up. Okay. So anyways, all right, fine. And then Bitcoin down. That's interesting. I wonder what you want to do with that. Here's our watch list. Gold. Bullish, but not really going up. So that's kind of interesting over there. And then all the Swissies. I'm short pound Swissy right now. Cool. If you want more information like risk on or risk off, or if you want more information like what's going on in the market, well, you'll just have to subscribe to QuantBox. TradeRs was great today, so we used a sonar. Okay, and the sonar said short the pound. That worked out really well. I was short pound Swissy and pound dollar, and then the weekly jobless claims, well, killed my pound dollar short very, very quickly. And I got out of that very quickly and took a minimal loss. Could have been a lot worse if I had been stubborn or not watching. Okay. If you're not sure how to do technical analysis, why don't you hire somebody to do technical analysis for you so that you don't miss a thing? Look at all these trade plans. These are the ones that are in play. Well, in play, but I should say forming. These are developing trade plans. These are all the things you should or could be watching. You can see that not only did the trade plan come out 15 minutes ago, but in that period of time, you can see the green candle. It's already moved since popping onto your radar. Yeah. These will all come out since the weekly jobless claims. And pound dollar was down. You can see the big red candle hit the bottom of the wedge. And then pop, big green candle. And that had to do with weekly jobless claims. And so it's thinking up in that area. That's kind of nice, right? But we also got lots of technical patterns for crypto, for stocks, gold. Remember, QuantBox, looking at macroeconomic data, says gold is a good idea. Well, these are technical trade plans outlining buying gold. So maybe this is an interesting day for you. I don't know. Or maybe you're just missing the whole thing. You like the stock indices? So I'd like the stock market to be up today and on the hourly chart 17 minutes ago. Okay, a triangle is broken through resistance line at 9 o'clock. So yeah, 15 minutes ago. Possible bullish price movement forecast for the next 2 days. Nice! Now tell me, that's helpful, isn't it? Oh, for sure. Also want to share with you some very, very exciting news. I've updated the calendar. Okay, so it's easier to use. South African manufacturing down, down 6.4%. That's not good. It was supposed to be up. It was 4. Now it's down. Here's the history. Isn't that nice? But let's go to news that has not come out yet. There's your jobless claims. It's spiked, which means that gives support to the idea the Fed should cut. Bailey's doing a speech, and he said in the press conference he wasn't going to give you information, and you'll have to watch the speech. Okay. Okay, but let me show you something. Mexican interest rate decision, right? Are they going to cut? Check this out. Watch. You click it. It comes out in 5 hours. Okay, they've started cutting. It was 11 and a quarter. Now it's 11. Maybe it's coming down. Isn't that nice? It's nice, right? That's an improvement. Cool. You're welcome. Okay. The sonar's going to load on for me. Come on, sonars. There we go. Okay. Now, in comparison to the calendar, these are the things that will move the market, A, and B, move the market in a predictable, reliable way. The other stuff might be important, but it may not be reliable. It may not be predictable. It could be all over the place. It just creates volatility, but not in a consistent fashion. If it's up here, it's tradable. So tomorrow at 2 a.m., we have UK GDP. Tomorrow at 8:30, we have Canadian jobs. And of course, it's predictable and reliable on multiple time frames, just not on kitty cat. Isn't that weird? Hey, that happens. So oddly enough, you might have a scalp on Aussie dollar. You might have a scalp on euro dollar. You might have a scalp on pound dollar. You might have a scalp on Kiwi dollar. You won't have a scalp on USD CAD, but you'll probably have a scalp on USD Swiss franc, but not on yen. Okay? That if it's worse than expected. If it's greater than expected, you do get a scalp on kitty cat. You want to see what that looks like? Okay? So look at this. 75% chance it'll be down if it's greater than. If it comes out as expected, 66.7% chance it'll be down. But what if it's greater than? Okay. So anyways, you'll have to play with it. It's a lot of data. It has to do a lot of calculations. There you go. And so let's say it comes out as expected. There's your, okay. It's nice, isn't it? It's beautiful, isn't it? So anywho, okay. Now, if you're going to automate your fundamental analysis, and if you're going to automate your technical analysis, I really, 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 really hope you improve as a trader. Okay? It seems logical. I can't promise it to you, but remember, if QuantBox says gold is likely to go up based on fundamental analysis. Okay? And then you go to commodities. Okay? And you have stuff like this on the hourly chart. Gold technically should breach this level and go higher. So now you have two different people working for you. A quantitative analyst that studies mathematically macroeconomics and suggests up for gold. And then completely independent, you have another analyst, in this case a technical analyst, that says, yeah, gold for multiple reasons looks interesting to the upside. Do you think that would improve your chances on trading gold successfully? That there are patterns that suggest up, and then there are trends that suggest up. I don't know if it'll go up. You don't know if it'll go up. But it seems pretty logical that it might help. Well, if you're with a traditional Forex broker, they do something called B-booking. They'll B-book you. And that's where they fully expect, and in fact fully want you to lose your money. They don't want you to be successful. That's how B-booking works. Okay? They create a dark pool where they just match, in their mind, idiot trader number one with idiot trader number two, and eventually all their traders lose money. And if the traders don't lose money, if they're profitable, well, two things happen. They move it to what's called an A book, and then they just hedge the crap out of it, and then kind of like probably want you to leave, or maybe they force you to leave, or maybe they change things so that you decide to leave. Well, that's not cool. What you want when you become a successful trader is you probably want an ECN business model for your service provider that is supposed to execute your trades. So now you're competing in the real world with, someone like you might be matched against Goldman Sachs, which is what's supposed to happen. We call that the interbank system. So once you get your small business set up, you have a good infrastructure like Trader's Way, and you're using an ECN. You have good infrastructure in this, or like a team in the form of a quantitative analyst works for you, a technical analyst works for you, and you make all the money decisions. When you have the complete package like that, I think you will have a sustainable small business. So I recommend you use an ECN. The ECN that I recommend to you is Trader's Way. There are others. Do your own due diligence. Okay? But I'm pushing you in the right direction. Okay? Now, they like this where they're talking about the strategy sessions that we do. It's because they want you to succeed. They value your education. If they didn't value their education, they would just have some idiot analyst that churns you. Hey, Byrne, did you see this trade? Go, 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 go. Trade, 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 trade. Also, and I'm going to do a presentation in the coming weeks, but there are many patterns that are taught by gurus, and I have quantified it using the power of traders. I've quantified it looking at something like 27,000 patterns. And I know which ones are reliable and which are a crapshoot. But your guru doesn't know that. And your broker certainly doesn't want you to know the ones that are 75% or 80% reliable. So they won't provide a service or education for that. Oh, my pound Swissy is negative again. Where am I? Oof. Ugh, I just lost 250 pips in the last 20 minutes. All right. All right, let's get out of that. Okay? How many people like the message that I give you that trading Forex should be run like a sustainable small business? How many people identify with that vision? That it's not a get-rich-quick thing, but it's a sustainable small business. Remember, I'm a businessman. Not only was I a high-tech entrepreneur, but I was a venture capitalist. I look at businesses. I want to see sustainability and scalability. I want to know that you can trade a $100,000 account. I want to know that you can trade $1 million account. I want to know that you can trade a $10 million account. Okay? Yeah. %55 of you are risk on. Coolio. It's good to know. let's do commodities and like gold, oil, and Bitcoin and silver. We can do some dollar pairs. We can do some yen pairs. We can look at the stock market. Does that sound good? Is there anything else that you would like me to touch on? Well, let's go. We'll start with silver because I didn't get my gold trade. So there's daily. Let's go on to a smaller time frame. So I'm going to move my stop to break even on silver. It's been kind of up and down, a little bit of volatility. Okay, and we have to go further out. Why did I buy silver? I bought silver, and I've been hitting you hard on this message for a long time, based on tomorrow's price. Yeah. Yeah. Oh, burned. I'm burping up veggie stuff. Ugh. It's rolling around in my stomach. Maybe 14 servings of vegetables is too many, hey, Bernd? But anyways, you can see the basic trade plan that you learn at Investor Boot Camp is you buy here and you exit there. That's called a day trade. So we're already done today. And I'm on tomorrow. And I'm wondering if we can get this up to there. Was it raining? Did I bring, let me triple check I brought my laptop in. Yeah, I did, but I moved the cushions and I moved my cigar, and it's cold out there all of a sudden. Whew. The rain is like ice cubes. Yeah. Byrne says, don't drink that much on an empty stomach. Yeah, I think that's the problem, right? But anyways. So are you connecting the dots of these daily lessons? Are they adding up? I know most YouTubers just put you into trades, but I'm trying to show you how to set things up a day in advance, a week in advance, a month in advance. And I think that's way, 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 way more valuable. Maybe it's less exciting, but okay. Trying to connect the dots so you can make independent decisions. Okay, there's silver, there's gold. I've been waiting and waiting and waiting on gold, and I'm close, man. So like, for example, for today, if I were to buy gold, we're kind of on the price using the exact same process. Gold might be interesting if we do one of these. And I've been waiting for weeks for this setup. Okay. Okay. Favor says, for you, for favor, sees the market as a huge industry globally. Yeah. Okay, I'm trying to drill home, in particular with QuantBox, is to show to you that there's a reason these things move. It's not random. And most people don't just sit at their desk and pop off 5 or 6 trades. There's a real reason why there would be a demand for gold. FX surveillance is, why don't I trade individual stocks? Well, I've moved into the world of endowments, and this was a direct result of me going to Harvard. I took a class. My professor was not a professional teacher. He ran the largest endowment for the arts in the world, the Metropolitan Museum of Art in New York City. And they brought in the Lincoln Center, so I've analyzed their endowment, the Yale Fund, so we met the lead investor for the Yale Fund, the Harvard Fund, small museums and all that kind of stuff. And my professor said I was a genius, or at least an idea that I had was genius. So that it really captured my attention, that I liked doing it, but being a full-time trader, I looked at it differently. It changed the way I looked at trading, and my trading experience changed the way he looked at managing these endowments, right? So, long story short, I learned that the construction of a portfolio can provide consistent returns. Now, obviously, I knew that with Forex, but these were much longer term trends, which were really interesting. And so I got away from individual stocks. So I had a portfolio of high dividend stocks. I had a portfolio of, I called them like my VC type stocks, where they were all like, can I find a unicorn and hold it for 10 years and watch it go up 1,000%. And I did stuff like that. And now I invest and trade my personal money, which, I have many accounts, but like I have a pension fund, which is the benefit of having a Forex company. So if you have a Forex company, you can start a pension, which is just a different word for a 401k. And now I manage it as an endowment. And like I said earlier, I collected a dividend today on my T-bill and chill strategy, which is part of a balanced portfolio. And that asset is paying me 12% a year in cash. So then what I do is I reinvest that cash, right? So now when I look at individual stocks, I don't need the risk, because what you're doing is you're betting on individual horses, win, place, or show. The returns are high, but you can also be wrong very easily. And then the way I constructed my portfolios now is I know with reasonable certainty how much money I'm going to make this year. It doesn't matter if the stock market goes up or down. Now, if the stock market goes up, I make more money, but that's just asset appreciation. I can't eat that money. I can't spend it. I can't reinvest. If I bought like EVgo and EV goes up 50%, well, that's only theoretical money. If I sold the position, I would have 50% more money, but then I got to go find something else. Well, that's not cool, right? So now it's more like, can I build a portfolio that pays me 10% a year and has less volatility than the overall stock market, less volatility than the S&P 500, which is the best benchmark? And I've done it, I do it, I teach it, we do it as a group, and it's extraordinary. I don't need to pick an individual stock. And even if it went up 100%, it doesn't benefit me that much. Okay, you see? Mosley, you said how, with the funny face. Expand the question. Like, if you want to know how I do it, I have a group. My group makes the decisions. Okay? I run something called the Council of Investment Advisors. We started with 50 grand, now there's 65 grand. And it will grow, and the idea is to grow, you should stay on the council for years. And my plan is to grow it to $1 million. That one account. And to do it without betting. To do it through logical portfolio construction with a very engineered outcome. Less higher highs, but also less lower lows, and consistent, reliable cash in the pocket income. So the idea, like if you were retired and you had $1 million portfolio and you can count on $100,000 coming in every year, now you can live on the $100,000 and your $1 million never goes away. So in 10 years, you still have $1 million, but you've spent $1 million in 10 years. You see that? Can you imagine? For 10 years, you live on $100,000, and 10 years later, you still have your $1 million in the account. That's my dream. That's my vision, and we're actually doing it. It's real. And people see it with real money in a real Wall Street account. It's legal. It's incorporated. It's legit. So that's why I don't invest into individual stocks anymore, because it doesn't do me any good in retirement. If my Apple stock is up 50%, I'd have to sell my position to eat. So what happens is after 10 years on 100,000, if you're withdrawing $100,000 a year from your $1 million account, in 10 years, you're dead ass broke. Can you imagine? And this is where it started, because I read an article or something that this woman was 92, all alone. Even some of her kids were dead because they were so old. And she ran out of money. And there wasn't anybody to take care of her. And that rattled me. So my plan is, if I can get the account up to, a couple of $1 million, it would be producing, let's say, 25 grand a month. And even when I'm dead, okay, or let's say after I'm dead, the 25 grand a month can go to charity. And that couple of million will just sit in the account for 1,000 years, giving charity 25 grand a month. And some of my closest friends and colleagues are going to do it with me. Now, that money could go to their retirement. That money could go to their charitable contribution. That money can go to their grandchildren or children. Okay? I mean, it's seriously cool. Okay? Okay? So I hope that answers the question, FX surveillance. I guess to say it differently, too much risk, not a reliable cash return. I want the cash. All right. My WTI. We're on tomorrow's buy zone. Okay. So I can highlight that. Boop, boop. Okay. So I'm eyeballing this, which is tomorrow's buy zone. And my plan for the day would be like this. Okay, question about gold. How much higher do I think it'll go? And that's where I have it right now. 2,500. Favor says, does capitalism include a social environment and how? They're called externalities. And capitalism is moving toward capturing those costs. The idea of even just basic things like accounting are fairly new in our history. So in my financial accounting class at Harvard Business School, in the first lecture, they bring out the first double entry accounting books from the Medici. Yeah. Okay. And we start with that, and you work your way out. So before the Medici, there wasn't even double entry accounting. And you'd have to imagine the Medici were probably 200 years ahead of everybody, right? So like in the course of human history, reasonably accurate accounting has only been around a few hundred years. And capitalism really has only been, and democracy is really, well, you can go back to the Greeks with democracy, but we went through this period of history where, kings ruled Europe, so that's not really democracy. It had to do with the Black Plague, and I wrote a really interesting paper on it. The Black Plague was the best thing to ever happen to Europe. One of the things it did was got rid of the kings and queens, and all of a sudden you had places like Genoa or Venice that had city councils of businessmen making decisions for society. That came democracy. This brought it back, this old Greek idea of democracy. And then, of course, the French Revolution, and all that. And, the Italians, it wasn't Italy then, but the Genoese and the Venetians invented things like insurance because, capitalism rewarded trade, and then trade became a big business. So that's why Venice was so rich. So suddenly Venetian ships could travel halfway around the world, be gone for 2 years, sell the wares from Venice, and then come back with new products. But there was a lot of risk to financing a deal like that. So they had to invent insurance to offset risk and all that kind of stuff. It was really, really interesting. Okay? And so now, Favor, we're at this point where we realize there are other costs besides the obvious costs of money in and then money out, right? And we're starting to include costs of externalities like pollution. Okay? That is a cost. And it'll have to be addressed directly and then create a new cost like, okay, we need to put carbon capture on top of the smokestack. Oh my God, well, that'll cost $20 million. Okay, now it's accounted for, but we do it. Okay? and we're going to start accounting for it better. Okay? And if you think about maybe stock prices and stuff, maybe somehow that accounts for things like one company has employees that are more entrepreneurial than similar companies that are less entrepreneurial. And therefore, you get better returns, better margins, and a better stock price. And so we'll slowly get there. Capitalism, like if you go back to like the 1910s, 20s, and 30s, so I mean, let's say 100 years ago, we were not even sure about the viability of capitalism, and we were seriously debating socialism. Okay? So if you read Karl Marx's stuff, and I have, it's very well written, it's very beautiful, and it's incredibly flawed. It makes a lot of sense, in particular to those that are not in power. So it's like, why should rich people be rich? And why should you even have to pay for rent if the landlord already owns the building? It's paid for. Why do you have to pay rent? If that's like usury, right? And of course it makes sense if you ain't got no money, but it doesn't make actual sense. And what'll happen is, well, nobody will have any place to live. Okay, so that turned out to be, and it's been proven over and 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 over again. Socialism does not work. Now, don't think that means communism. Communism is different. Okay, socialism has never worked and will always lead to complete disaster. Then you look at where capitalism has come in, and like great examples of like Japan post World War II skyrocketed in productivity and household wealth, a standard of living went skyrocketed beyond the wildest dreams. And then we repeated the same thing in Korea. And Korea skyrocketed beyond anyone's wildest dreams. The average standard of living just soared beyond belief. And then like we repeated it in China. China's communism, but they went from socialism to capitalism. And the standard of living and the life expectancy and child survival rate and education level and diet skyrocketed. Yeah, that gets pretty esoteric. Like the difference between socialism and communism. Think of communism as a mechanism to organize and control society, usually like a central government, that kind of stuff. Socialism is more of an income distribution mechanism. But that's probably not a great example. So like in China, they're communist. But their central tenet of the control they're issuing is still very much capitalism. Now, your customer says, Wayne, communism has never happened. Well, if you ask a Chinese politician, are they communist? The answer will be yes. So if you ask someone, are you a communist? And they're like, yes, I'm a communist, then they are a communist. Okay. But there's probably a better distinction made, and there's probably, I'd ask ChatGPT and then probably knock out a paper for you. But one is an organization of the economy, and the other one is an organization of the society. And we're very much used to these two things being linked, like the Soviet Union was communist socialist. and it failed. Now your customer says, no, China is not communism. Okay, well, look, I've been to the People's Hall of China. I've been an international diplomat invited by the Chinese government. I've sat during a session. This is not like a tourism thing. Okay. I've been to a meeting in which 1,000 people in the room all said they were communists. And there's red stuff. Even my invitation, red. And I had a red ribbon. And they all said they were communists. The carpets were red. And then when I met with the press and I did a press conference, they said they were communist. So anyway, so I don't know. I was told by the people shaking my hand that they were communist pig dogs. And I'm like, but I'm a capitalist pig dog, right? And now, but they were also capitalist pig dogs. So again, so I'm just answering sort of Meta's question, right? Socialism is a way to manage the economy, or a philosophy of managing the economy, and communism is a structure, mechanism, or philosophy for managing the society. And they're not, like, what is it, mutually exclusive? It's the idea like you can be communist and capitalist. You could be like democratic, which is not communist, but socialist. And probably the worst thing would be communism and socialism. Okay? All right, I'm not here to argue with you, your customer. That's fine. I'm not sure where you're going with that, but I'm just answering Meta's question. That's sort of the way that I would think of it, right? Now, my understanding of Cuba was it's communist and socialist. And I look at it and I think it's a total shit show disaster. I love the Cuban environment. I love the Cuban people. I love the Cuban music. I love the Cuban food. I love the Cuban architecture. Okay? But when you mix communism with socialism, it makes sense to me. I'm like, and I love going there to see it. I mean, there's cool things about Cuba, like because I'm not trying to be judgy, right? So there's this little park, not far from my Hotel Nacional, and that part of town is a little more family, especially just a few blocks kind of up the hill, and it becomes much more family oriented. And there's this cool little park. They have a couple of little rides and a couple of places that sell ice cream, and it's cheap. And you get families at this park. They come out because, well, it's hot at night and nobody has air conditioning and everything's overcrowded. So you see like moms and dads and extended family, aunts and uncles and grandmas and grandpas and the little kids. You get multiple generations and they're like, let's go to the park for an ice cream. To me, I look at that and that's wonderful. Okay, that's wonderful. You don't really see that in the United States. I don't think, well, I don't. So I look at it, I'm like, how wonderful is that? Is that better? And I'm like, yeah, I think that might be better. But the structure of like, is the thing holding Cuba back, is it communism? And I say, no, not necessarily. Now, it may be restrictive on individual rights and freedoms. True. Not necessarily. It doesn't have to be that way. But it seems like that's how communism goes. Okay, so, in my analysis of the Cuban society, is it necessarily the communism? And I don't know, because I don't live under communism. I don't know all the other secret stuff going on in the background. It's not my choice. But there's massive weaknesses in democracy as well. So I'm like, okay, well, democracy isn't perfect and will probably fail in hundreds of years. But now how about the communism part? Well, I just don't know. But the socialism side, to me, is striking. It's striking. I'm like, oh my God, this is not something that I like. Because like Havana, and I've been outside of Havana too, right? But like Havana is such an incredible city. I'm telling you, it is beautiful. But it's crumbling. And you walk around and like, I think that should be fixed up. I think that should be fixed up. I think that should be fixed up. All it needs is investment. But when you ask questions, you find out it's impossible. There's no incentive. There's no reward. There's no like a common thing for a foreigner, I'm sure, is you get there and you're like, look at that beautiful house. That is a mansion, but it's falling apart. Well, why don't we fix it up? Okay? Why don't we fix it up? Let's get some lumber. Let's get some paint. Let's redo the roof. We'll need not just roofing tile, but we'll need slate roofing tile because this was a mansion. So let's get some slate. Let's redo all the windows. Let's redo all the floors. So we'll need the floor stuff. And let's do this and let's do that. And then you find out, okay, first of all, you can't buy the house. Second of all, even if you could buy the house and you want to fix it up, there's no paint. There's no machine to do the floors. You can't get the windows slate. You can't get a slate roof. What are you talking about? But let's say you could. Then, well, you might not get the people to be able to do it. And then let's say you do. And so now you've done the impossible. You bought an old place. You got all the supplies. You got all the workers. You rebuild the beautiful place, and you would never be able to sell it. There's no incentive to do it. There's no supplies to do it. There's no people to do it. And then you're like, well, and that's that. Now, things do get done. There are things that I went to this beautiful hotel that is just kind of along one of the double boulevards in a neighborhood. So it's not like a traditional hotel. It used to just be a house, a mansion at that, but just a house, and it was fixed up. So then I asked, well, how come this one gets fixed up and all the other ones don't get fixed up? Oh, it's probably the son of the Ecuadorian ambassador or the Colombian, ambassador's son, and they pop some money into it, and whatever. And it's inside deals and, all that kind of stuff. So again, it's just not open free market. So long story short, it doesn't get done, but I don't believe it's necessarily capitalism. Communism. But if the communists set the rule like, well, you just can't own this, that's one thing. But even if you could, let's say I go in as a Canadian and I'm like, oh, I want to bring in some Canadian dollars. Cubans love Canadian dollars. I'm like, I can bring in some Canadian dollars, and then, but here's the thing. They're worried that suddenly Canadians will own 40% of Havana. And so anyways, yeah. And it made us like live there, knows the situation and the corruption. But, is that communism? I don't know. Maybe. Again, that's a political structure. Okay? That's a political structure. There are plenty of socialist countries that are not communist that are corrupt up the yin yang. So I'd say, well, very often, and we call those rents actually, where through a process of doing something, everybody steals a little bit. So it costs 10 times more to do something, and therefore nothing ever gets done. So like you decide you're going to build, there was a great one in Venezuela where they're going to build a soccer stadium. And of course, what happens is you got to bribe the local guy, you got to bribe the state guy, you got to bribe the federal guy, and then you got to so then you get all the licenses and you get all the land, and then you start to build, but then all the different subcontractors are stealing, and by the time you get to the end, it took 5 times longer, and it's 5 times over budget. But it's not necessarily communist, right? In the United States, that's why we rarely build nuclear power plants, because that happens here too. Is that communism? No. Is that capitalism? No. Capitalism builds more for less. And it doesn't care what religion you are, what color your skin is. You'll get hired, you'll make it. Okay? Capitalism is pure. Okay? All right. Why don't I use Bloomberg Terminal? I don't need it. If I needed it, I would do it. All right. So anyways, to answer the question that I had before, where's gold going? There we are. Notice that gold just dropped to my buy zone and popped. Cool. You're welcome. My silver is up. Great. So I just made some money on silver. Oil's recovered again off my buy zone. Simple enough. Got pretty close to break even on some of these. Yeah, so I just made $250 while I did that speech on communism versus socialism. Cool. So I'm up 1,000 pips. Nice. Okay. And now we're moving on tomorrow's trade plans today. I'm not buying it on seasonality burned. It's useful information, but that's not why I'm buying it. Okay? I recommend gold. So if I was having a meeting with a client, I would say you have inflation. Let's call it 3.3%. And we have so we'll call that I. GDP. Okay, let's call this 1.8. Under these circumstances, I is greater than, I guess I could do it the other way. I 3.3, I think I said, is greater than GDP, so nominal GDP is Y. And what did I say? 1.8. When I is greater than Y, I buy gold. That's one way of looking at it. It's not the end all and be all, but you have to have inflation. Okay. So the other reason I'm buying silver, same reason as gold. The only thing is silver gave me the setup first. So I bet on silver first, then I bet on gold next. Cool. Let's take a look at some yens. Okay. So here's CAD yen. I'm in at 112.5. We're at 113.5. So just over 100 pips, about 110 pips. Today's trade plan, which you should have formed yesterday, was buy here, and our target is there. But that was formed yesterday. So yesterday, which you should have done the day before, okay, is this one. So let me zoom in a little bit. Okay, when you were here, okay, your plan should have been, and this is not hindsight because I do this every day. So for you hindsighters, okay, buy the dip. Now we're up here. Great. So what's the idea? Well, that maybe in the next 12 to 18 hours, you'll get a dip there. So you should be planning that now. That you should already be making money now from what you did earlier. Okay? Amateur traders will buy it now and then have it come back. And they're like, I didn't make any money. Uh-huh. And when it comes back, I buy it. Okay? I buy the dips. Okay? It already made a higher high, bro. You're supposed to be in down here. Okay? So we'll see what happens later today. All right? Boom. All right. Aussie. I'll zoom into this one, and maybe we'll do hourly chart, huh? Okay. Aussie, how did this work? Down, up, double bottom. This is already a line for me. Higher high, right? So higher high, higher low, buy it. Now we're here. Sweet. So now that's the next step. Hua. Okay. Cool. So on and so forth. Find your favorite, make a decision, make the trade. Okay? Do you remember? I did all of this weeks in advance. Here's the zone. Okay, higher high, higher low, roll reversal, long and gone. Tell me this is good. Tell me I'm making connections. It's the same message I've been drilling home for 20 years, but is anyone having an aha moment? Look at some dollar pairs. Euro dollar, again, did this last week. Here it is Thursday, and you finally got your setup on your roll reversal. Seems like it's going to try to make a higher high. Okay. Really? I made no connections with anybody? Really? Is this sort of a negative lesson? Is this disappointing? Do you feel deflated or elated? Talk to me, Goose. Okay. Okay. Dollar pairs, yen pairs. I guess we'll have to do pissy. I think I'm losing money on that one, and I'll have to decide. No, I'm making money again. Yay me! Yay me! All right. Do you see what my strategy is? Okay. That's my strategy. I did that 2 weeks ago. Is it? 2 weeks ago? 1 week ago. Okay. Let's do the tactics. Okay. You see I'm short. Let me move my stop to break even. How did I come up with that price? Okay. Actually, I got to take, that's not the right number. I have to zoom in a little bit. No, too far. Okay. It was that one. There you go. Okay. The news came out. So it was kind of drifting. It had gone up and then it drifted. The Bank of England did not cut. Came all the way back. I sold on the 618. And my plan is down. But before you get all googly-eyed, this is what matters. I was already a bear. Okay? Okay? So will it work out? I don't know. Okay. So we'll have to just wait and see if I can collect the vol. What? Okay, let me ask it this way, like a chat GPT. What percentage of the time does the pound fall when the Bank of England pauses? And in particular, we're going to say 4-hour time frame. Meaning, how often is the pound weaker than it was before the news 4 hours after the news? What's your answer? Say, I knew that before I took the trade. Oh my God. Not just beautiful, but smart too. Why trade blind? Huh? Why trade blind? Anybody want to know? Not 100%. Not 80%. You know, Tradars tells you this. You don't even have to guess anymore. You just know. Quantitatively, your analyst has gone back in time, looked at all the times the Bank of England paused, watched all the charts 4 hours before the news, 4 hours after the news, quantifies it, and tells you. You don't even have to guess anymore. You don't even have to do the work. There's no reason why you have to trade like an amateur anymore. Those days are done, my friend. Okay? The combined monthly cost of QuantBox and Tradars is $160. That's it. Okay, nobody knows? There's no reason that you should not know these things. Okay? 70% chance, or let's say 70% of the time in the past. YJ, there he is. Oh, man. Miss you, buddy. Yeah. YJ, one of the greatest FX boot campers of all time, everybody. You want to know somebody strong and tough and smart and beautiful? YJ. YJ once asked me, he said, Wayne, I'm struggling with my consistency. So I said, I want you to trade 100 1, 2, 3 patterns in a row. I don't care what time frame, I don't care what currency, but you have to spot them and then you have to trade them. And YJ is strong enough and tough enough and disciplined enough that he did it. I'm like, well, there you go. Now you're disciplined and now you're consistent. Cool. So, will this survive? I don't know, guys, if this trade will survive. I don't know that. I don't know. And maybe I moved my stop too early. I don't know that either. I don't know if this will make a lower low. How I don't know the future. But it could shape my decision. So, we knew, again, it was logical. And again, QuantBox said, Tradar said, if the Bank of England pauses, okay, pound is likely to suffer. But it also said there's no 2-hour scalp. Okay, which tells you it's not going to do this. So you're better off to say, okay, we got the direction correct. Now, you could have guessed and gambled and put the trade on first. I don't really like that. Or you can let it fall and then say, give me a 618. And now you're risking 382. Put your stop above the top, okay? And see what happens. Cool. Okay, yes, maybe a bit of a shot in the dark, but not too blind. Not dumb. Right? So again, I don't know if it'll work. Why is it? Oh, because of this. They're not lining up perfectly. There we go. Okay. So my stop might be a little early. That's all. But it's just a scalp, bro. Well, but, there's a pretty reasonable chance it continues falling until tomorrow. Yeah, maybe. Whatever. Okay? Not the dumbest trade in the world, right? Trust me, I've done dumber. Okay. Maybe an inverse head and shoulders? Yes. Maybe. What do you guys think of that? If you happen to be a bull, now I'm not here to convince you to be a bull. You have to already be a bull. Down, up, down, up. Now it's not quite high enough, but it's pretty close. What do you think? So what you have to do is grab the neckline. And here, measure that distance. Okay, and then you can project that up. Maybe. I think I embarrassed YJ. Sorry, YJ. Okay. Now, it's hard to spot that, and that's on the daily. What about the 4 hour? What about the 1 hour? Like, if you're a bull and you're like, I think that's going to inverse head and shoulders on me, which is good if you're a bull. So now what you could do is have your grunt do the grunt work. Hey, grunt. Hey, do the work for me. Okay. Okay, crypto. Well, first of all, let's go here. You're only interested in Bitcoin. You already know Ethereum's at a triple bottom, right? Wait, you don't know that? Well, you should be watching, bro. Anyways, let's go to Bitcoin and say, give me, okay? And you're looking for bullish trade plans. Well, there's patterns on the 15-minute, the 30-minute, and the 60-minute that all say up. Look at here. You see on the daily chart? Let me do this in white. Down, up, down, up, down. Whoa! Wee. Huh? Very good, my friend. Very good. Right? Ma. Noise. So maybe we pick it up down here, buy it at 63, taking a 70. 67,228.08 minimum, which is just here. Next level is here at 71. So 63, okay? 64, 65, 66, 67, 68, 69, 70, 71. $8,000. If it works, at least you know it's there. Okay, at least you know it's there. So this has some potential. Look at this, the up and then the down. Look at this. It's not even 63, it's 60. Oh my God, I'm off. It's $10,000 on Bitcoin if this works out. Huh? But don't pay the $80 for traders, huh? Yeah, don't pay the $80. Not worth it. What do you mean it's not worth it? Criminy. Criminy. You have... Oh. Okay. Are you guys getting a sense of how to do this right? Yeah, that's right. YJ does that. Double, right? Double bottom, higher, high, higher, low. Do it again. Double bottom, higher, high, higher, low. Do it again. Double top, lower, low, lower, high. Do it again. Yeah. Okay. Okay. Yeah. I mean, remarkable. Yeah. Traders. How come you haven't signed up for it? Are you afraid of it? Of the automation? Is it too much? Is it too confusing? You get lost in the time frames? There's a way to use it. Okay? There's a way to use it. So is it that missing piece? Okay? Like these trades are in play. Okay? So I'm long gold. Okay. Actually, no, I'm long silver, but I want to be long gold. And I just showed you the trade, and I set this up weeks in advance. But notice, like, this is in play, and QuantBox believes there's a 75% chance. No, wrong one. 74% chance we're on our way to 2340. I think we can go higher, but that's just a day trade. Okay. Let's do Forex. And hey, traders, show me trades that have a 70% chance. Okay, Aussie CAD, take it up to resistance. It's just a scalp. You're late, of course. You should have been down here at 90. But there's a few pips left if you're going to skippy scalp. This one looks, yeah, like, again, hours ago you're late. So that one's already in play. 71% chance. This came out at 8 o'clock in the morning. And we should get to 125.23, which, remember, this was a bear before, but then the weekly jobless claims popped it up because the dollar got so weak. So that's like, okay. Now, looks like traders noticed it even before weekly jobless claims, which is kind of interesting. Yeah. Okay. Aussie yen. So I'm long this already, and it's saying that there's a 75% chance we'll get 103.3 to maybe 104.5. Aussie yen 104.5. I'm only at 103. Another 150 pips on top of that. How do you think that makes me feel? Oh, well, I got the mortgage because the money was so cheap. Yeah, my mortgage was 3%. Why would I give up cash? So, like, put it this way, Mahai, right? So, like, in my retirement account, for example, no matter what the stock market does, I make 10%. So, I have a choice when I have a pile of cash. I could borrow money at 3%, or I can use the cash that would go, or use that cash and put it, right? Like, so if I put the cash into the house, I lose my 10% income. If I borrow the money at 3% and keep the money in the, in the retirement account, then my carry is 7% every year. Now, if I have that's my retirement account. So and I have other accounts for sure. So I have that choice. Like, do I put the money in the house and have no mortgage? Or can I do better? Can I do better than that? And, it's a personal choice. I don't know if I would choose that for everybody, but, I sit in front of the markets all day, every day. So can I beat 3%? Yes. So let's say I use money in the market to pay my mortgage. So actually, my mortgage is free. Right? You see? Mahai? So the way I've engineered the money in one account pays my mortgage, so the mortgage is free. So it's financial engineering. So there was a time, Mahai, this was in one of the financial crises. I think it was it COVID? I don't think it was COVID. It felt like it was longer ago. But there was a time, Mahai, and I taught this, when Ford Motor Company, Ford, issued a bond. I think it was a 5-year bond paying 10%. But at the same time, you could go to a Ford dealership, buy a $50,000 Ford F-150, and they gave you financing at 0%. Okay, so assuming you have $50,000, you can borrow the $50,000 for free. Meanwhile, you take your $50,000 that you had the cash, and you buy a Ford bond. So every year, Ford paid you $5,000 a year every year, and you took the $5,000 a year and you made your Ford F-150 payments. And you got your Ford F-150 for free. This is how the rich get rich. You would never spend money on a car. Your cars should be free. How many people here would like a free Ferrari or Lamborghini? Free. Anybody? You prefer a Porsche GT3? Anybody want a $450,000 car for free? Maybe you're more of a Rolls-Royce gal. Huh? How about, hey ladies, how about a Bugatti Veyron wrapped in white pearl iridescent color? Well, you're like, I'm not going to spend that kind of money. No, what if it was for free? So let me tell you how wealthy people drive these cars. You'd have to be an idiot to pay cash. And wealthy people don't. This is why you ever see guys that they're like, well, I got 3 Ferraris and 2 Lamborghinis and I got the old Mercedes Gullwing. You're like, dude, how do you have all these cars? Well, someone that's not wealthy thinks they spend money. No, they're free. You can have as many as you want. So how does it work? Like, for example, okay, you buy an apartment building. Okay. And I'll make that a little thicker. Here's your apartment building. Okay, great. Who are the parties involved? Okay. You put in, let's say 30%. Who's the largest bank? Who's the largest investor? The bank. The bank puts in 70%. All right, cool. Now, if you don't have any money, you can then bring in outside investors. You can actually bring in investors to put the 30% in, and you get the skin in the game for doing all the work. So you could actually do this with no money. You just got to go out and raise the other 30%. So if it's $10 million, well, you put in $3 million of your own money and the bank puts in the 7. Well, if you don't have $3 million, you go out and you do the raise and you bring in other investors. They give you the $3 million. And what you do is you keep 1 or 2% for yourself for doing all the work. They're dumb money. The bank is dumb money. You do all the work, but maybe you clear 2%. Cool. Whatever. Who pays the mortgage? Okay. The poor people pay all the expenses. They don't have enough money for a house, so they rent. And the rent covers all the expenses and all the insurance, and you save some money to make repairs and pay the gardener. And then you pay the bank. Doesn't cost you anything. Okay? Meanwhile, there's a trick. Okay? Each year you depreciate. Depreciate. It's an expense. So this $10 million building is worth $300,000. There's like a standard there's a standard schedule, and there's different ways you depreciate and different logic. You can depreciate more up front, or you can do it on longer over time. This is your accountant and your tax attorney, but this is totally normal. So every year, okay, rent is income minus the insurance, okay, minus the rainy day fund, minus the gardener, minus the electrical and gas bill, minus the depreciation. Okay? Okay, now you have net operating income, and then what's left over, you pay the mortgage. And when you do it right, this building breaks even. So you made no money, right? The building, for tax purposes, has broken even. Rent is equal expenses. Is that true? What's the trick here? The bank got paid. The gardener got paid. Well, the investors didn't get paid. What are we missing here? The $300K was an expense. So you collected the $300K from the renters, paid all the expenses, including the $300K, which is not real expense. It didn't go to anybody. It was just an accounting mechanism to say, well, it was an expense. So now these guys get the $300K. Tax free. Now, for them, maybe it's income, but the building doesn't pay any taxes. This is why Trump doesn't make any money. So you do that every year for 5 years. Every year, the investors get $300,000. The bank gets what they get. The renters paid everybody. The renters paid the bank. The renters paid the investors. Great. Then, step 2. Okay, so anyways, if you were the only investor, you could take the $300K and get yourself a cheap Ferrari, paid for by the renters. But here's the next thing. In 5 years, you have to refi. This is part of being a commercial real estate investor. Every 5 years, you have to refi. So the renters are renting and renting and renting and paying for everything. And let's assume the building is fully rented. You got lots of renters. You've never missed a payment. You've never been late. And the economy is doing good. So now the building is worth $12 million. So you refi at the new valuation. You get rid of this mortgage. Okay? Now you have this mortgage. Okay? So now notice that the renters have paid down the mortgage for 5 years. So now it's not a $7 million mortgage. It's a $6 million mortgage. Okay? With a $12 million valuation. Okay? You do all that and take 70% of the new mortgage from the bank. And so here's the thing. You are probably sitting on $3 million in cash. Or $2 million. Now you haven't done any work. Okay? You just have a bigger mortgage again, 70% of 12. So let's say it's just $1 million. Let's make it more believable. You now have $1 million in cash. Plus you're making $300,000 a year still. So on year 5, you get a payday, a cash out of $1 million. You go buy yourself a Ferrari with the renter's money, and you still make $300,000 that year, and you still have $500,000 or $600,000 left over in the bank. No, I hate accountants. I spend a lot of money on accountants because I hate it so much. Yeah. My accountants and my tax people are communicating right now. I just took my company through a complete audit. We redid everything from last year. I felt like it needed to be done. So I've spent thousands and thousands and thousands and thousands of dollars. Oh my God. And we're close to resolving it this week. So I'm looking forward to it. So anyways, no, I'm not an accountant. Okay, so anywho, the Ferrari is free. In fact, you could buy 2 Ferraris. So only an idiot would save money, go to a bank, or save money, and then go to the car dealership and buy a car. Because now it would cost that person, let's say, $350,000. You bought yourself a California, a Ferrari California, boo. Okay, or a Lamborghini Gallardo, boo. Huh? And you buy one of those cheap cars, and it cost you your life savings. You saved money throughout your life to do it. That's a poor person's attitude. Somebody that doesn't understand money would buy a car that's guaranteed to depreciate in a way that you lose. Like, it doesn't make any sense. A wealthy person, they get their cars and their jet planes for free. So, like, again, the question is, like, why do I have a mortgage? Because my mortgage is free. My money pays for my mortgage. Why would I spend money on a house? And my house needs to be free. My money is like a renter. My money pays for the expenses. But that's too much. That's too much. I think now we're getting too intimate. But let me know, did you enjoy that last conversation about how to get your Ferrari or Lambo for free? And you're like, well, Wayne, that's a trick. Now you got to go buy a $10 million apartment building. No, You only need $3 million to get a $10 million apartment building. And you're like, but okay, $3 million, but how do I get $3 million? You have a Forex account in front of you. What's holding you back? Conservative, disciplined trading over long periods of time. If you can do that, you can talk to rich people and say, well, I'm a fantastic Forex trader. Look at me. I'm patient. I'm disciplined. I have a structured approach to everything I do. I don't make, right? I have losses, but I don't make mistakes. Okay? And you show people that and they're like impressed. And they're like, oh, but you know what? I have a deal for you. I have a real estate deal for you. I've lined everything up. I'm just $3 million short of this $10 million profitable building with income. And they're like, really? You only need 3? Yeah, let me, and you do a pitch, dude. Raise the money. Okay? Wealthy people have money laying around all the time to buy another real estate asset. Okay? So you can do all the hard work, raise the $3 million. And then maybe you don't make a ton of money because you have no skin in the game. You earn some money because you did all the work, but then you do it again. And then you do it again. And by the time you've done it 5 times, now you actually got some money. Now you're like, dude, I'll put in 1/3 of the $3 million. You put in 2/3. We'll split it 50-50 because I found the deal. I structured the deal. I got the deal financed from a bank and I'm doing all the work. $150,000 a year. Flip it 5 years later on the refi. And now you got that money in your pocket. And now your 7th deal, you don't need anybody's help. You go straight to the bank. I got the 3M. Let's get this deal done. The bank loves you because they've done 6 other deals with you that always perform. Easy. It's an easy raise. You pick up the phone and you're like, hey, Barry the banker, I got a new deal. They're like, sweet. They know you're consistent and reliable and disciplined. You come through on your word. Hey, that's a lot like a Forex trader. But you can do that in Forex, you can do that in crypto, you can do that in stocks, you can do that in stock indices, you can construct portfolios, you can construct real estate deals. You are a money machine, but not the get-rich-quick kind. Consistent, reliable, like an ATM. Have a wonderful day. If you're in my day trading group or my swing trading group, we are meeting at 4 p.m. to plan out all of next week. Show up. Let's do some charts. Let's plan. Let's strategize. And let's have a great week. Just want to double check the positions. Where am I at? Did I give back? Nope, still over 1,000. Nice! Cool. Peace on earth. May the pips be with you. May your profits be above average. That just happened.